It's a funny story at the moment. It's hard to really understand what's going on in retail. Consumer sentiment has actually bounced back, but consumer spending hasn't. It's a similar story in business generally. Business confidence has bounced back, but we know that leasing activity is also still quite protracted. So there are mixed signals, and it's really a sign that we're sort of in this transition phase from that stimulus package and low interest rate environment of last year and moving into the fading out of the stimulus package and into a higher interest rate environment, coupled with just a general lack of confidence about the future, and consumers are simply not spending. One of the big drivers that I mentioned earlier in Queensland is population. I mean, population is really an industry here. You know, the movement of people from interstate and from overseas, and the demand therefore for goods and services to settle here is an enormous generator of economic activity. And this chart shows you just what's occurred in the last 12 months. We've actually seen a fall in the growth of population, especially from net interstate migration. It's the biggest drop in, well, really in 20 years. So this is really quite a significant impact, and it's been felt most particularly on that occupational side and the demand side of the retail sector. It's fed straight into to the demand for housing, and almost on the knocker. As soon as interest rates started rising in November last year and the first home owners grants started fading away, the demand for new housing started to fall. And it's fallen more in Queensland than anywhere else in Australia, almost a 20% drop in dwelling approvals in the last, well, since November last year. So this is really the backdrop to a retail sector that's been impacted quite heavily. We've seen things like vacancy rates move up in retail, again something that doesn't happen very often, but we track vacancy rates here in the Brisbane CBD, and we see them, they look quite low by, say, office market standards, but around 5% is certainly much higher than the average that you'd expect to see. There's been an element of new stock coming into the market, as well as we've noticed this in Melbourne and Sydney as well, that some independent retailers, not so much to chains, but independent retailers will come to the end of their lease and simply walk away and close up the business. And so it's a real sign that this prolonged low consumer spending is certainly causing some pain amongst retailers. Thankfully at the moment though, we've got the sort of the demand and supply balance broadly correct, because the amount of new stock coming into the market, new floor space in the retail sector has been actually falling over the last 4 or 5 years to hit almost sort of below 50,000 square metres this year is the lowest we've seen for a very long time. So it's actually nicely coincided with the period of low consumer spending. The investment market, and this is what sets retail apart from office and industrial, is that the retail investment market has actually been constrained by a lack of quality stock on the market and a lack of turnover. And it's meant that we're really just calling pricing pretty steady, because there's precious little evidence to support any variation in prices in the recent past. So we're seeing a very broad range of yield, anywhere from just over 6% for regional shopping centres, and stable now really for about the last 18 months, right through to 9.5% for bulky goods, which of course has linked very much to that housing sector, which has come back so far in southeast Queensland. A yield in bulky goods which is higher than industrial now. So I guess we're seeing in retail, we do expect a very gradual improvement in retail. We certainly don't see a quick turnaround, very cautious over 2011. We think housing starts will start to turn around. In fact, the big blip in finance approvals that was caused by the first home owners grant, low interest rates, has now come right back to where it started, and it's starting to sort of just grow again, just incrementally. So the whole of that distortion is now out of the market. We're back to where we started from. So that will actually help, as the housing sector retraces in Queensland, it will actually help bring the economy back. So important that it is to this part of the world. Ironically, it's probably a good time to be dusting off new projects and getting DAs organised for the retail sector, getting set for the next cycle. Look, we can't see in this present environment much change in average rentals in retail, and really looking further out to that stronger 2012 year before we do. Investment market strength, we think it will start to come back though, as the economy improves, as employment improves, as housing improves, and the better quality stock starts to come onto the investment market. You should start to see some pressure on yield again. And to actually focus in on that point, of course, we've got Peter Rossi here, who's handling the Woolworths portfolio at the moment. It's really the focus of the country's interest on the retail sector at the moment.